We raised the money from Fortress. We said we'd get them up 2 times money multiple and about 15-16% IRR. By the time we worked all our way through that, we gave them north of 40% and about 3x on it.
This is the Time on Wing podcast. Welcome back. I'm Courtney Miller with Visual Approach Analytics. With me, Garrick Deschavant of Collateral Verifications. Garrick, who are we talking to today?
Oh, we are going to talk to Jeremy Barnes today. Jeremy he's the CEO at Falko, which those guys kind of focus on the regional side of aviation, which will be fun to talk about because there's a lot of cool stuff going on. But prior to that, he was at Orbis Capital, which he founded in 2001. And then he had a couple years stint at XL Capital. Before that, and I think this is where he started his career in aviation. He was with the BAE Systems, where he led the commercial aerospace financing division. And prior to that, he started his career at Citi as an investment banker in leveraged capital and corporate finance in London. So it's going to be a lot of fun. We've met him a few times. Great guy. He's always got lots of cool stuff to say about the regional space. So, Jeremy, this is your time on wing.
Just a quick intermission to pay the bills, and then we'll get you back to the podcast. You've probably heard of Visual Approach Analytics. Here's what we do. Visual Approach delivers contrarian data analysis on the commercial aviation industry. Subscribers can start with our industry analysis and weekly insights, and then upgrade to access our downloadable charts and visualize market trends. You can even white label our charts in your own branding. If you need a white paper, a custom presentation with novel contrarian insights for your investors, or your board members, or your boss, yeah, we do that. Our objective is not to be the thought leaders in aviation. Our objective is to give you the tools to be one. Visualapproach.io. Check us out. Okay, back to the show. A quick disclaimer for all podcasts before we start. The opinions you're going to hear expressed today are personal, and those of Garrick, myself, the guest, shouldn't be relied on as fact or as professional advice. This applies specifically to any mentions of public companies and matters not in the public domain. We haven't verified every statement, so please treat this as the candid conversation that it is.
Jeremy, thank you very much for joining us on the podcast today. As we do with all of our guests, we'd love to kind of hear how you got your start in aviation and, where the passion came from. You've obviously been in aviation now for some time, so you must like it in some way. But, we'd love to hear where you got your start and how you got to where you are today.
So actually, it's quite curious. I'm not sure I actually really have a passion for it. I have a lot of fun doing it. I'm not convinced I actually have a passion for it particularly. I've always had this thesis that you really don't want to fall in love with the toys, right? And then I think you're basically screwed. So actually, I'm actually a banker by birth. So kind of when I look at what we do from a business standpoint, I probably think more like a banker, probably erring much more on the commercial side of being a banker than anything else. So banker by birth, I joined Citi in London a long time ago. Nothing to do with aerospace, didn't come close to an airplane financing. So I was around in the heady days of barbarians at the gate and all those sort of good things. So I was in the right place at the right time. It was a great bank. It was kind of the go-to bank in the world at that point in time. If you wanted a big check in a hurry to do a big hostile takeover, guess what? So I did that for about the best part of a decade. Then, as is always the case with banks, every now and then they kind of go bust. At least they did in those days. So about 93-ish, 23-ish, Citi went bust. The old adage, which was something along the lines of, well, countries don't go bust and whatever else. Guess what? Half of South America went bust, and with it went Citi pretty much. So being a banker with no balance sheet was not much fun. So I left. I wasn't quite sure what I was going to do, other than it seemed pretty tedious just to sit around with no balance sheet and pretend you were advising people on things. And in a roundabout way, I kind of got lucky. So a very good friend of mine was, again, a close friend of a guy who ran a big piece of British Aerospace at the time. And British Aerospace at that time, A, had 30% of Airbus, and B, more particularly, had the largest regional aircraft program in the world, kind of bar none. Now, now the aircraft were generally pretty shitty, but it had the largest program. It was huge. And for those of you who are old enough, you probably remember in those days, there were like 13, 14 manufacturers of small commercial aircraft, and they went from Embraer to Beech to, I don't know, Dornier, and the list sort of went on. And none of them made any money. They were all in some, kind of state-owned, although BA kind of wasn't, but actually it was just an amalgam, a whole load of essentially what had been state-owned business of just wedged into BAE. So nobody made any money. Basis of competition, therefore, came down to how much credit, vendor finance could you actually kind of give your lessee, your customer. And BAE was a past master at doing that. So by the time we got to 93, they had about $6 billion worth of risk. All of it, in those days, the accounting standards were fairly lax. So most of that was kind of lurking off the balance sheet rather than on the balance sheet. So
$6 billion in $93?
Yeah. Go figure, right?
Yeah. Wow. Yeah.
It was. We had 600 airplanes. We were the second largest aircraft leasing company in the world that nobody had ever heard of. Right.
Wow. Yeah.
Wow. Anyway, so it was extraordinary, and the customer base they were like heroin addicts. There's the only way they take a blooming airplane is if you gave them a lease or a loan or a residual value guarantee or something. It was horrific. Anyway, early 93. If you recall, or 92, 93, you recall there was a few issues in the Middle East, right? And so huge spike in oil. There was a bunch of bankruptcies, particularly in the US. So Eastern, I think, went bust. Braniff, I'm sure, went bust in and around then. Pan Am probably went again. And out of the 600 airplanes, we probably parked up 200 airplanes in very short order, right? Huge.
So these would be what? Jetstreams and Metros?
So the Jetstreams, it was the L146, right? Yeah. The 146s. We had all the horrible ATPs. We had the Jetstream 41, all that. Another terrible product. That stuff, right?
Yeah.
So they basically, in 93, so when I got hired as a consultant by one of the guys who actually ran the Jetstream program, who, they were in a complete mess, right? So, they sort of couldn't afford to get out because the barriers to exit were huge, absolutely massive, right? But by the same token, they sort of couldn't afford to carry on, right? Because they just had to keep chucking money at this stupid program. So I got hired. The good news is I knew absolutely nothing about aircraft financing, nothing. So I could ask all the dimwit questions. Anyway, so they basically said, okay, well, here's the problem. What would you do? How would you fix this? So, the good news was, I went away, asked all the questions they probably should have asked themselves over time, but they never did. Came back to them and said, okay, putting aside, I do remember going to a dinner up in Scotland with the management team of this part of the company after having spent 2 weeks' work. And I basically said to them, let's face it, you haven't sold a single airplane. Every aircraft that you finance is probably overfinanced by 30, 40%. Economically, the airplanes are worth a fraction of what it costs you to manufacture them. And that's the problem. Right? Anyway, of course, they didn't really like that message, but so be it. Anyway, so I gave them a plan on how to clean it up. I told them how to organize themselves to clean it up and all that sort of good stuff. And here's the tools you really need to actually analyze the risk you're in and or what incremental risk you might be taking, because you basically couldn't stop this program. It was at least in a nanosecond, right? Mm-hmm. And so they said, well, thanks very much. And then, and as far as I was concerned, I was done. And they said, no, you need to come and run it. And I said, no, I really, really, really don't want to run it. It's the last thing I want to do is run it. Anyway, so the negotiation just went on and on and on and on. And eventually I got bribed effectively, or got well paid anyway, since might be a nicer way to put it, Ben, to go and work for BAE at HQ for the CFO of the business. They had by the time we got to 93, it had gone seriously pear-shaped. And they wrote off £1.1 billion in and around 1993.
Wow.
So share price went through the floor, rescue rights issue. There was a 1% take up in the rights. And we go for them, talk about a vote of confidence, right? And there was a few changes to management, new CFO, new CEO, and I got hired by the new CFO to just go clean this thing up, right? And so we had people still down at the operating level, but the way we ended up cleaning up is we kind of reverse engineered it, which we basically strangled them to death. So I got the job of cleaning everything up, but essentially, in order to continue with the production line, they still needed to use the balance sheet to support the aircraft sales. So we put some parameters around what you could or could not do in terms of supporting the finance of these airplanes. And over time, it basically just strangled it. So by the time we got to late 90s, we basically closed down the manufacturing base of the whole company. Just gone. So 90s was a big, probably the best, if I look back at my career, probably the best education I had, because, we did workouts just all around the world, like everywhere. We had airplanes where they never should have been put. And so workouts kind of everywhere, the US, South America, I think it was Australia, UK was, some really big ones. And then we kind of get to the late 90s, we'd stabilized the book. It was still, I don't know, $3.84 billion or something even then. Mm-hmm. And, we thought, okay, well, we better figure out how we truly exit the risk now, because we kind of stabilized it. We weren't adding to it particularly. And we did what would now be called a synthetic securitization. So we basically went to the insurance markets and we got a big credit wrap around the whole portfolio. So we had a 13-year cash flow, forecast cash flow off the book. And we got the insurers to guarantee that cash flow profile for 13 years. So we got a $3.8 billion policy, like a 10% deductible, like first loss, and we paid $71 million to trade the risk.
Wow.
It was, a spectacular deal. And, timing's everything in life. And I think I left in like 99, 2000, but, I think BA probably claimed about $1 billion under that policy. If you think what happened after, if you think what happened in the 90s and onwards.
Yeah.
So it was one of those deals that will never be a repeated deal, I guess. Not because, actually probably, who knows? The markets are generally mad enough that people forget what went wrong. So they'll probably do it again. So did that, cleaned it all up. We had some multi-line insurers, and in those days there were the monolines. So we did that, and then figured we'd sort of kind of done our job. So we left, had a bit of a interregnum at one of the multi-lines that took some of that insurance gig. And then we set up our own business. Like five set up our own business in 2002-ish or something or other. And we thought, well, we learned a lot over the last decade or so, like how not to do it. Then we learned a lot about risk in and around aircraft. I mean, some of the analytics we were running even then were, completely different approach to anybody else. We'd figured out how to use the insurance markets. We'd figured out how to use the capital markets. I think we were one of the first to do an aircraft ABS deal on fractional shares on corporate jets, for example.
Oh, wow.
We did
that.
Okay. Right. For Bombardier. So, an Raytheon rather. So it's pretty cool. So we thought, you know what? We'll just go and set ourselves up in business to see where it takes us. So we did that. We kind of advised on people on how to deal with their portfolios of risk. So we did about $3 billion worth of deals for EDC over that period, because they did huge support for the Bombardier program, it was billions of dollars. Then we helped BAE again. Then we helped Saab because they had a program. We had helped Raytheon because they had a program around like a fractional share program and all that stuff. So we helped Bombardier. We kind of did all that. And then about 2010, 11, BAE rang up and said, well, you remember that business you used to run? Well, we've got this bit left. Do you want to buy it? And so that was it. So that was the start of Falko. So we found some money. That, again, was one of those deals where everybody else looked at it and thought, you've got to be crazy. So we, in 2010, we bought 142 airplanes off BAE. They were 100 of the old Avros, so seriously old aircraft, right? They were like 14, 15 years old. And we bought, I don't know, like 30 ATPs and whatever the rest was in Jetstreams. We paid about $200 million for it. I think everybody else thought we were just like, how can you ever make money out of that? But we were a pretty well-educated buyer. We raised the money from Fortress. And, we said we'd get them up like a 1.5, 2 times money multiple and about 15, 16% IRR. By the time we worked all our way through that, we gave them north of 40% and about 3x on it. So that was kind of, and then hedge funds are what they are, right? Which is, well, if you make the money, they'll give you more money, right? So that's sort of what happened. So we did that successfully, and then we kind of migrated into making other investments with Fortress. So and they kind of went from we bought kind of a next generation we built another portfolio for them of next generation airplanes, which we then duly monetized. We did some really interesting things. So, we bought 40% of Conair, which is the fixed wing aerial firefighting business, which was a pretty cool thing to do. And then we shoved, like 12 Avros through it, which we converted to aerial firefighting aircraft, all that sort of stuff. So we did a few special missions airplanes. I mean, helpfully in Fortress World, they didn't, they just said, you just go find the opportunities with the money. So we did some pretty eclectic bunch of things. And then by the time we got to, when was that? 2015, we'd taken about $750 million of equity from them, which is not an insignificant sum. So they said, look, best will in the world. This is all fantastic. We're making good money, but, why don't you go raise your own money? Because we know, unusual in Fortress World that they let a good management team cut loose and go find some other money because for obvious reasons. So we raised our first fund in 2015, spent it by the time we got to 2018, sort of. And then 2018, we bought $1 billion worth of airplanes from Avalon. So these were airplanes that they had bought along the way from CIT and all sorts of other places. So mishmash of regional airplanes that I have no real interest in. But anyway, so we bought those. So, basically, it's $1 billion. So we then had to go and raise our second fund. So we raised that in 18, going on 19. And then, we were pedaling along merrily till about 22. And then Fortress got an unsolicited approach to buy Falko. So they weren't really looking to sell it, but, one thing, set of circumstances around where we were and where we sat, we came out of a fund or funds, which were sort of coming up to their sell-by date. They were right at the end of their life. So it sort of coincided. So we ended up going from what it arguably could have, should have, might have been a nice quiet deal with one of the big really well-known lessor to a full-blown process, which on the one hand was interesting, but on the other hand, it was a lot of work. But I think we ended up getting over 20 bids for the business, which was crazy, right? So very flattering, but just a lot of work, right? And then that was far, as we ultimately went with, as you guys know, we ended up determining that we would go with Chorus. And the real driver for that was, if you look at the two businesses, they actually lined up pretty well. So, we had largely used jet product. They had largely new airplanes of some shape, but mostly props. So that kind of worked. And we had mostly people in Hatfield. We're trying to look to grow into Dublin, and they had 25, 30 people in Dublin. So it kind of all made sense. So that would have been, it'd be interesting to see where that could have, should have, might have ended up. 6 months into that deal, Joe Randall, who had been the champion of the deal in Chorus, left, just decided he was going to go. It's like, oh, okay, well, this is interesting. So, which, I don't think put a pause on anything, but, it became clear that we weren't orphaned at all, but nevertheless, Joe had been the big champion of this whole thing. But anyway, so, and then, again, we kind of, I think ultimately what we concluded was, I think, between us all was, and I'm not sure quite what other lessors would say in the public domain, but actually being an aircraft leasing company in the public domain in a kind of mid-cap, mid-cap public company is tough, right? Because we represented about 50% of the total value of the company. So if we twitched, actually it was quite meaningful. And/or what you're always trying to do is solve for whatever that quarter end number is. So cash needs to list of the quarter end. Okay, so what is that? Well, we really need to sell something. Yeah, but why would we do that kind of stuff? So that was interesting. And trying to hit whatever the EBITDA number was and all that sort of good stuff. So one thing led to another. And in particular, we had a mixed business model. So they had a bunch of airplanes on the balance sheet. All of ours were in funds. The analysts basically just didn't understand it. Like, we were getting absolutely no credit for essentially the value of the business. So we determined that we needed to synchronize the model. So we went into the market, decided what we'll do is we had, $900 million worth of airplanes sitting on the Chorus balance sheet. I think that if you kind of took the analytics apart, from the public analysts, they sort of valued that at $400 million, which is just potty, right? So we thought, oh, what the hell? Well, go sell them, right? So the initial thrust was to synchronize the business model, release the equity that's buried in the balance sheet assets, and away we go. And what we found as we went along the way is plenty of people interested in the on-balance sheet assets, but boy, they'd be a lot more interested if they could get hold of the service of Falko, call it what you will, right? Because. And so what became clear is there was a big gap between the price they pay for the assets without Falko and the price they pay for everything, right? And if the board of the company was sort of somewhat between a rock and a hard place, and ultimately, it's a public company, right? So that the numbers that we started they started to get in and around selling the enlarged business rather than just a discrete pool of assets became so compelling they sort of had no choice, right? So that's sort of how we ended up jumping around in a 2-year period. It wasn't planned. It was just set of circumstances rolled together. So that was it. And today, we're now in HPS come BlackRock. So, HPS guys, it was a full-blown auction process that we went through coming out of Chorus. And HPS won the day. It was a straight fight on numbers. There was nothing fancy going on there. What was helpful from our standpoint, we'd have been happy wherever we ended up, given the runners and riders we had at the end. But it was sort of helpful that we knew the HPS guys because they'd been at Fortress way back when we did our original deal. So we'd known Justin for 10, 12 years or something like that. So, they weren't short of money. So, when we signed up with them, they were what they were, and they had $160 billion. And then, of course, along comes BlackRock with 10 trillion or whatever the number is, right? So, anyway, so we're not, we've ended up we're very happy where we've ended up. And I guess along the way, I'm still trying to work out if it's helpful or not. Our competitive landscapes changed quite dramatically in 3-4 years. So, we've obviously seen NAC effectively be broken up, and we'll see where Azura obviously will carry on growing. I guess our friends at DE may carry on growing. Who knows? And then obviously, we merged with Chorus, that took somebody else out. Competitive landscapes thinned out quite significantly over the last 4 or 5 years. So, which is helpful. And, and obviously I think we would argue, and you guys probably know better, you do the analytics much more than I do. We still seem to be able to, protect, sustain, retain the returns because they're just, there isn't the wall of competition or capital that pours into our space. Long may it last, right?
Yeah, right. Why do you think Chorus was valued at such a discount? That kind of combined company. That's interesting.
The answer is I don't know. I think I think, I'm one of them, right? I was a senior man. We did a very, very, very bad job explaining what the true components of what it was really, really worth, right? And I do remember they hadn't had like an investor day or anything like that for many, 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 many moons, right? Now I'll get the date wrong, but I would guess in about 21, something like that. Yeah, probably 2022, sometime or other. We had what would their first investor day for like a decade or something or other. And the whole essence of the investor day was to show the analysts' equity where the value was buried, right? And it couldn't have been bloody clearer. Like, but it didn't. It just nothing. Like absolutely nothing. So now I think part of the challenge was we were a mid cap company, so not that much interest in Canada and mid cap companies. You're not, with the best will in the world, you're not going to get the highest paid help, analytical help in the banking community to analyze what we do. That doesn't help. And then we sort of fell in no man's land from an analytical standpoint, right? So on the one hand, you have we were quote jazz, so that was sort of over there. And meanwhile, over here, you had this monster, which was a leasing company, right? And so they didn't understand it, and arguably we just didn't do a very good job at selling it. Now, more often than not, we had buy recommendations and everything else. I think one of the other challenges we had is if you looked at the shareholder base of the thing, it was largely a retail shareholder base. So it almost didn't matter whatever you said, because it was not going to move because you didn't have any big institutions coming into the stock, right? Yeah. So that didn't help.
Do you think the airline really was there? You mentioned some of the confusion and kind of from the analyst side and how they saw the overall company, and what was truly unique was the airline, which isn't. I say it's not really an airline. That sounds worse than it is, but it's an ACMI-ish CPA provider for one customer.
Yeah. But I think the way that the analysts looked at that was that it was a declining business, right? Because they could see the profile of the contract coming off over time. So it was going to go X growth, right? And so it's like, but this is all going to expire in 2033 or something like that. So all they would do is just continuously PV back a set of cash flows, which just got smaller every year, right? And there was no, and we couldn't sell them on the idea, this isn't going to go away, right? It fundamentally fulfills a role in the system. And at some point in time, they will renew it, right? Because they're not going to take this back into the mothership because. So for whatever reason, we just, literally, it was the PV or a series of a declining set of cash flows, which is, guess what, right? So, and no growth, right? Literally no growth. So, there was no prospect of Air Canada adding too many airplanes to the CPA, right? So it's like, this is just, at best, you could have argued looked at it as a yield stock, but we weren't even paying a dividend, right? So that didn't help either.
That's right. But it's so, I find that so fascinating because as far as I'm aware, maybe SkyWest does some leasing now, but it's very, very small. This is kind of the first airline and lessor at scale that I can remember.
No, I don't think there has been, right? And I think if we'd been able to sell it, it would have been. I think it would have been very compelling, right? But for whatever reason, we just couldn't sell it, right? And so. So we can sort of blame ourselves somewhat for it. And I suspect maybe kind of looking at it out of the gate, I think the way that the deal was also financed, like our deal was financed, coulda, shoulda, might have been a bit sharper, I think. So if you look at the way they brought Brookfield to the table to finance our deal, it ended up being a bunch of very expensive preference shares, right? So that didn't help, right? So, I mean, I can't remember I'd like to say the yield was like 7 or 8% or something, which wasn't cheap at the time. And then they had some pretty expensive early redemption terms as well, right? So, so that, the odds were sitting there thinking, well, if this does go swimmingly well, guess what? Brookfield will do okay first, and then we'll see what's happening left. So it's kind of a combination of the two. But my guess would be that there's no way. It was the only way that Chorus could actually get that deal funded was bring in Brookfield with some preference shares because their ability to, I don't know, just go and do a straight rights issue was a big fat zero, or it had been so heavily dilutive that it was never going to happen. No?
How did the timing of that line up with NAC's challenges? It would have been pretty close.
Well, it was a bit. So that was afterwards, right? So we did well, right? Because we ended up having a sale price after the. So we closed with. I have to remember this now. We closed with Chorus in 22, right? So we started the process with them, a sale process in 2021. So yeah, we're wandering through 21, and obviously we did our ABS deal in 21. So I kind of remember that quite vividly. But NAC was still in a mess then, right? It was still in bankruptcy, examinership, whatever it was. I seem to recall, right? But that, I mean, kind of, if you looked at, which of course we spent a lot of time dealing with banks and rating agents and everything else. If you compare and contrast what we look like by comparison to, I don't know, them, it was kind of chalk and cheese. So it wasn't difficult to explain why, we were in the shape we were in. By contrast, they were in something, like they were a dramatically different space, particularly from a liability side, right? Like dramatically different space. So, we had a pretty, by the time we got to 2021, we had a pretty clean book of business. We had all of our lessees were in some shape or form stabilized. If there were deferrals, they were all kind of sorted out and all that garbage and stuff. And on the liability side of the balance sheet, we'd gone all the way through COVID, and we didn't ask for one drop of a deferral in interest, in principal, anything else from any of our banks. Largely because we just hadn't been greedy on leverage, right? So we'd been, we always, maybe we were luck rather than anything else, but we ended up having a book of business that was yielding 12, 13, 14%. So you don't need a lot of leverage to get to 15+%, which is sort of what the equity wants. So don't get greedy, right? So I suspect our leverage was 60 odd cents on the dollar going into things. So we always had a buffer. So even though, granted, some of our lessees didn't pay for quite some time, we had sufficient cash flow coming in relative to the debt we had that we could service all of that and still make it work. So yeah, but that took a bit of explaining, right? Because nobody believed us, right? So,
is there a hangover from? So I'm trying to remember. It's not even that long ago, but
yeah, no, it's not. Yeah, but hopefully everybody's forgotten it. Which is good.
Yeah. Yeah. So was there a hangover from NAC? I mean, you mentioned that it wasn't that difficult to get past, but were you associated with NAC based on your sector of the market being more on the regional side?
Because we were doing the same thing, right? So it was marked down as, well, all the lessees are crappy in that space. Anybody who uses one of those is a crappy credit. Mm-hmm. That's kind of it's like the urban myth rubbish, right?
Yeah. But there's also value in that too, right?
Right. And so it was. Yeah, well, they all went bust, right? And the answer is, well, actually, that's not quite true, but be that as it may. And B, the assets were, all the, physically, the assets were, that they were kind of like, from a value standpoint, well, of course, they just fell through the floor because, right, all that sort of stuff. And then the next thing was, well, of course, all of these are just going to get parked, right? Before everything else, these are all going to get parked. And then then you start to explain to them, no, well, if you actually went back to the great financial, crisis, whatever, and you look what happened then, guess what? Guess what's going to happen now, right? When eventually when everybody woke up and people did start moving around, which, as you know, right? Guess what? The big guys were operating the asset with the lowest trip cost because they wanted to get the operation up and running. They didn't, and they wanted to do it at the lowest risk and at the lowest cost. So, funnily enough, the small commercial aircraft were up in the sky. They kind of led the way back, and boy, did that. We kept telling the rating agencies, the bank, this is what's going to happen. This is how theoretically it's going to be. Just simple economics will drive this, right? Yeah. And because nobody would believe you, but guess what? That's the way it works, right? And so, so very quickly, we had we had pretty much most of our fleet was up and flying pretty quickly, right? Yeah. We got caught by a couple of the big bankruptcies. We got caught by Aeromexico, pretty much so did everybody else, right? And we got caught by Virgin Australia, but that was probably going to go bust even if there hadn't been a pandemic, but whatever. And then we got caught by Alitalia, right? But those are kind of our big three. But the amount of time, every now and then I kind of stumble across a presentation we would have had to make to, an agency or a bank about, well, this is NAC and this is us, kind of stuff, right? And you just have to keep going through it because it just was, but it's all the same. Now it's just one. Well, it's not all the same, like fundamentally not all the same, and you really need to get into the compare and contrast how we financed our business for one. If you look at the lessee base that we have by comparison, that was kind of fundamentally different. I'd hazard, I know full well, I'd hazard a guess the way that, we ran our business was probably, in fact, I know for a fact it was a lot tighter than they ran their ship, for example, and the list went on. So when we hit more than a bump in a road, we were probably more capable of managing that than they were, or we had more wiggle room in our capital structure to be able to kind of absorb some of those shocks, right? And they had none, right? They had just like 90 banks or something or other that we're trying to coalesce. That's impossible. And we must have had 6. Not difficult, right?
Mm-hmm. Yeah.
So I don't, I can't. I mean, I think they committed some cardinal sins, but I think the biggest one they probably committed was on the liability side. Like, the way they rightly or wrongly financed the business was interesting. Right?
It's funny. I look at the regional space, and I feel like the understanding from those that invest in aerospace continues to be kind of the same, right? And yet, you've gone through multiple downturns, right? You have information, you have data to show this is what we've done, this is why we've been successful, and yet I feel like there's always that resistance of like, that can't be right? Or it's like, but it's still and yet you keep going back, going, but look at what we did. Look at these airplanes are flying, right? And so what? I wonder what drives that. Is it just it's easier to follow the bigger guys because it's it takes too much work to understand the regional space, or what do you think drives that?
Well, I don't know. I don't know whether you're at the DB conference earlier this year. Right? Yeah, I think a lot of it is just lazy analytics is one part. I mean, truly just lazy analytics, right? Across the piece, both at the appraiser end and also at kind of the banking end. I would hazard a guess if you're in the banking world, or I don't know, it doesn't matter what world, the investor world, your CFO, your CIO is more familiar with an Airbus or whatever it is than he is, a CRJ. All he thinks about when he climbs on a CRJ 900, he had a shitty ride from DC to somewhere, right? This is a horrible, shitty aircraft sort of thing, right? So I think a lot of it's just lazy analytics. It's just it is a harder sell because it just is a harder sell because you've just got to understand it a bit more. But as you guys publish stuff, right? I mean, the fundamentals around our space are in many cases certainly no worse than they would be if you kind of wandered into the narrow body space. And in many cases, they are a lot better than they would be if you were in the narrow body space. And certainly, I would argue, if you looked at it on a kind of risk-adjusted basis, this is not a difficult decision, right? But, I think it's somewhat lazy, easier to sell the kind of the big toys. It's like, yeah, well, of course I can remarket an A320 anyway, kind of speech stuff. And I would probably say as well that if you kind of come into our, and I mean, we were just talking our own book here, right? You come into our universe, then you really want to be sidled up with somebody who really does know what they're doing, as opposed to a bunch of kids with a spreadsheet and, it's all right. I got my 3 appraisers from, I don't know, Cerium, IBA, whatever you did. And, and my loan to value is 75 cents in the dollar. What can go wrong stuff, right? And maybe you could sort of get away with that in that part of the world. You can't get away with that in our part of the world, right? We've had instances in the past where, it's like some of our bigger LPs and our funds have rung us up and said, can you give us a hand? Like, okay, well, it's like, oh shit, where's this going? And, they will have they would be investing in something over there, something like another fund over there somewhere, who randomly decided, well, geez, this is an absolute bargain. Like buying these airplanes is buying these regional aircraft is an absolute bargain. And then they figured out actually it's not really a bargain, one, because they just didn't understand it. They just took the appraiser numbers and that's sort of about it. And then they figured out actually, remarketing those airplanes is, you can't post them on eBay, right? You've got to do something a bit better than that, right? Yeah. And that's where you need a Falko or an Azora or whatever you need, right? Because they have they know the asset, they know how the asset should perform under certain missions, and they know the customer base, right? And I think I would argue that putting aside the US for the time being, if you go outside of the US, much more of what goes on ends up being a bit more relationship based than just turning on the odd dime, if you know what I mean, right?
Yeah.
Yeah, that was something I noticed as kind of Bombardier transitioned into Airbus. When it came to the regional players, where you said, and I agree, the relationship is just that much more important. It's not that Airbus didn't have weaker relationships. They had none whatsoever, because why would they? I mean, they don't, same with Boeing, I'm sure, and same with the large lessors. There is no relationship in that sector where the relationship is even that much more important, because why would they? And suddenly you find yourself in that space, which, by the way, is an incredible moat for companies that have that, right?
Yeah. Absolutely. And, it is, yeah.
I mean...
I vividly remember when we spent, as you probably remember, right? We spent a lot of time trying to figure out how we could get a C series deal done, right? And that was pretty problematic. I think we gave up in the end because we just couldn't get any sense out of Pratt and Whitney, I seem to recall, at that time, right?
Probably for the better, Jerry.
Yeah.
That was one of those lucky misses, right? But whatever.
I'm pretty sure I was the guy who was like pushing it too.
We went up there and I went up there with the CIO of Fortress one time, because we were talking all sorts of stuff. And actually, we agreed a deal to buy, what are they called? They basically had 5 or 6 or 4 or 5 of their test aircraft, right? Mm-hmm. They were all slightly different weights and all that crap and stuff. And so we actually cut a deal to buy those, right? Because he was going to buy them whenever they weren't needed, right? And we were going to convert them into corporate aircraft, which would be pretty cool. Anyway, but I do remember, it had nothing to do with me, but I do remember when Airbus finally took the C series and became the A220. I know there was a dawn. It was like, oh Jesus, well, this is just a completely different game, right? Yeah. And so I remember going with Mark down to Toulouse to kind of give them 101 on our space, right? So it's just different, right? Yeah, different, completely different nexus, right? So
I've found, just in working with yourself and Mark over the years, and the other thing, it's not so much that other lessors, other analysts in the industry get it wrong as far as this regional space. It's that they don't care to get it right. It's too small.
Yeah.
It's just, okay, so I'm wrong. Who cares? It's a tiny piece of the industry. Whatever.
It sort of doesn't matter, right? It becomes a bit of a training exercise, and all that sort of good stuff, right? But that, which on the one hand is frustrating, right? Because sort of to your point, there are so many data points out there that actually would support our investment thesis if you bothered to go find them, if you wanted to. But people can't, it's a bit, it's like, some of his theories around like assets in our space are like, no, that's wrong. And that one's wrong as well. And that one's wrong as well, right? Because, right? Now, I'm sure I won't change his mind because he'll just carry on, but it is what it is, right? So, but, helpfully, A, we proved people wrong, which is kind of cool. B, in and amongst the banking community, we've demonstrated to, I don't know, we've just taken on, I don't know how many banks we've got now, but, we had quite a tight cadre of banks for a while, which is now expanded by 4 or 5. So, and we're in the midst of refinancing the second fund, touch wood. And, that was kind of oversubscribed, which is kind of cool. So the banking community, we now have a set of people in the banking who get it, which is great. And the challenge we have, which is, from our investor day, is what we now need to do is kind of generate the secondary liquidity. It's all the sort of people who go out there and buy pools of 320s and whatever. It's like, well, this is the same stuff, right? And arguably, in some cases, is actually more robust and can certainly generate you a better risk-adjusted return, right? Yeah. So, and we're getting there. We'll get there. It's just time. Just you kind of do one deal and another deal. I think we kind of set our sights on as right, trying to do something out of Japan. So if we can make that work, that would be interesting. And then, we'll, at some point in time, we will find a way of doing what some of the other big guys do, which is take a pool of assets, find a financial partner on the strategic partner and kind of monetize our assets that way, right? Start to generate that sort of pool of equity. As opposed to, well, the only way out of this is you just sell them to an airline or sell them to a strategic, right? So,
yeah, interesting. Yeah. Of the portfolio, I just had, do you have any more like Avros or some of the original like ATPs, or are those all gone, or are they?
Huh?
Gone. They're all gone. Okay. That would be a great test case right there to be like, see, we still have the.
No. So they it's a bit like the Q400 actually. There's the Avro was a seriously bad commercial aircraft, like one of the world's worst. Right, it was just a shocker. It was heavy, slow, just 4 engines, burnt fuel like I don't know whatever. I mean, it couldn't be worse, right? However, what it ended up finding at the end of its life was missions that really, really were great, right? It couldn't be better. It was like a Land Rover. You give it something difficult to do, like a short runway, high altitudes, gravel, all that stuff. It was one of the few airplanes that could do whatever it could do. So in very quick order, we did some interesting things around the aircraft, which made it more flexible, adaptable to lessees. And hey presto, they just disappeared. So, we sold a whole load of them into Australia. So they were running mostly on the west coast, from sort of Perth up to all the oil and gas fields, all that sort of stuff. Mm-hmm. So short fields, gravel, all that stuff. And they were low utilization, which was just fine, right? Because you didn't want to burn time on 4 engines, sort of thing, because they were stupidly expensive engines as well. We had a few that ended up in places in South America because they could get into high fields, so that was kind of cool. And then obviously, we ended up, we must have sold 16, 17 into Conair in Canada, of which 12 are now operational. So, it doesn't get much better, right? I mean, that airplane can hang in the air at 150 knots, which is sort of how you fly these things when you're fighting fires. It's got 4 engines, which is better than 2. So if you want to get out of a problem,
it's the only time 4 is better than 2.
exactly right. So
when it's on fire,
you only use was 4's good for once, right?
Yeah.
So that was kind of super helpful. And they're built like tanks, right? I mean, they were unbelievably heavy. So they disappeared. For the life of me, I don't know where the ATPs went. I think a lot of them got converted into cargo or something shocking.
I remember there was like one or two freighter operators. I remember having to value those.
The guy in Scandinavia who was converting them into whatever it was. So I have no idea where they all went. And then, and Christ knows where all. I mean, every now and then, if I'm sort of wandering around like the Caribbean or somewhere, or South America, you'll spot a jet stream. Is like Jesus. I mean, you wouldn't want to get on that, right? And actually, I tell you, we put a lot. There were a lot of Avros went up into northern Canada as well, so they were flying way up north into the oil and gas stuff. So no, we haven't got one left. I think the only one left in the UK is now a library in a school down in Bristol.
Oh wow! Okay.
So we sold one. There was a school down in Bristol, which is right next door to the Airbus facility. So it's like Filton. So it had great aerospace heritage, and somehow or other, they persuaded themselves that they want to sort of perpetuate the kind of the aerospace, theme. So I think either we gave them or we financed them buying an old Avro hull, which ultimately then got converted into a library, which is pretty cool, right?
That is cool.
So in the school.
And it's only slightly slower than when it was an airplane.
Exactly. Yeah. It's probably still falling, probably still corroding like hell, right?
Yeah. But so
no, we haven't got any left. So we've got a few nice models, not many left. There's a few. We have a de Havilland Museum just around the corner from the office. So there's a couple of hulls sitting there. There's a couple of comets sitting there as well, right? So, so we've got nothing left.
And the Avro was it's interesting because your timing on kind of going long on that asset is right when you took an airplane that wasn't favorable, so low buying price.
Yeah.
But had, like, if you need an Avro, that's the only airplane that can do that job.
If you wanted to get out of London City Airport, that was sort of about it, right?
Yeah, in the US it was Aspen, right? I mean, you couldn't serve that market for years.
Yeah. So you could take it, we pay, for the life of me, I can't remember what number we paid. We probably couldn't have paid more than $2-3 million a copy, a couple of $1 million a copy, right? And we could lease these things for, 120 a month.
Wow.
Right?
Yeah, what's that, Eric?
Right? And then the residual value was not difficult after that.
Yeah, it doesn't matter.
Right.
It doesn't matter. Right? And the only scrap we really had was with Honeywell, because it was like classic end of life, not really interested in prolonging the agony of the engine program and all that sort of good stuff. So the price, and they had a monopoly over all of the engine shops. And by the way, there was no used LLP parts kicking around. They would just overhaul them, shove them in the skip. So it's like, well, it looks to me like you've got to rebuild a full life engine, right? Which was just a stupid amount of money if you've got 4 of the bloody things as well, right? So we, the number of times I went backwards and forwards to Phoenix, having a scrap with them, were like, well, you do realize what you're doing here, right? You're just going to ground the fleet because economically this doesn't make any sense. It's like not interested. And so that's how resourceful we get. So we ended up saying, you know what? Well, that's fine. So we wandered off and we bought 39, 40 engines out of the market. And then we funded the opening of 2 engine shops. Like literally, we started 2 engine shops, one in the UK, which still exists, I think. And they started building half-life engines, which of course, and then, next thing, we had a very grumpy Honeywell chasing us like, well, you can't do that. Well, absolutely, we can do this, right?
Yeah.
And that's what we did. So that helpfully that sort of prolonged the life of the asset as well, right? Because you could all of a sudden you didn't want 18, 19-year-old airplane with 5 years of life on the engines because nobody wanted that, right? And certainly nobody's going to pay for it. So we started building half-life engines and all those sort of good things. So, that was kind of an interesting part of the puzzle too. But yeah, it was, as I said, there weren't many bidders for this stuff when we bought the book, and most people thought it was very odd. But the basis was incredibly low. We had a good customer base, like we had Air France and SAS and who else was in Swiss, and the customer base was phenomenal, right? And the yields were crazy, right?
Yeah, because there's nothing.
To your point, a bit like the Q400 today.
Yeah.
If you need a Q400, you need a Q400.
Yeah.
You don't need an ATR. That's just probably not going to do it, right?
Yeah, so, you need the Q400 for the performance, like in Africa right? It does well, but the 1 and 200. The same thing. The ATR will eventually be the same thing for different missions. The Twin Otter. I mean, the list goes on and on. I call it the vinyl of aviation, like the vinyl records. Like those have been replaced 3 times over by cassettes and 8-tracks and CDs and digital. And yet they're still in the stores. Like they're still making
the UK. I can't remember that. The vinyl numbers in the UK just going through the roof.
Yeah, it's amazing.
It's just crazy, right?
Yeah.
And so, it is absolutely, and so I remember vividly back in 2020 when the wheels fell off the Q400 world. I remember at the time thinking, geez, we should just go buy 20 of these things, right? Because they have unbelievable utility value, right? And at the time I was sitting on the board of Conair as well, right? And I still am. And so I remember having board meetings and, they'd already identified the Q400 as kind of the next gen firefighting machine. And then up popped all these aircraft at the most ridiculous prices, right? And so, for the life of me, we must have bought a dozen in 2020, 21, like completely on spec. And, banks, and I can't remember, banks, we got some from the administrator of Flybe and all that sort of stuff, right? But it was robbery on the high seas, right? Because for what we needed them for, buying them at $4 million a copy, we could go spend a couple of $1 million on them, $3 million on them, convert it to a firefighting machine. They'll fly for 20 years and the payback's full, right? Kind of stuff. So, anyway.
Yeah. How many Dash 8s does Conair have today?
I would say we just bought some from Chorus actually. So I think we probably have getting on for 20, if not a bit more now.
Wow.
How many are converted is a different matter. I think we have a plan to get to 25 next year after, something like that.
This is amazing. I haven't looked at Conair lately, but the fleet effectively are the Avros still.
Yeah.
And the Dash 8s, there is the multi-role. I wasn't aware of that, but that's cool.
Yeah.
But on the Dash 8 side, and then you've got the air tractor as well, which is just
and we got scoopers too. We got the 4 big scoopers, right? So so we and those scoopers, kind of back to interesting times and interest. The 4 scoopers they've got, 415s they've got. We bought in Falko world in Jesus, when was that? 16, 17 or something like that. We bought the last 4 415s off the line at Bombardier. So, which again, most people thought, well, what on earth are you doing, right?
Yeah.
But actually, I mean, they those were hen's teeth, right? Because they're irreplaceable. There's just nothing to replace them from a mission standpoint. So,
right. Yeah. And I think because the 515 is the next version, but when is that coming out? That's still.
It's been coming out for a long time. I think is the short answer.
Yeah. Right. So. Yeah. No, I think it's
don't. I mean, the answer is don't know. Obviously, I still sit on the board of Conair. So I mean, everybody's kind of sitting waiting. I think there's been a lot of false dawns on when it's coming out and all that sort of good stuff. To the point where, as you guys, I'm sure you guys know, there are a bunch of guys, particularly in and around Europe, thinking about how they can either build water bomber aircraft from kind of the ground up sort of thing, through to, oh no, there's an even stranger one, which is taking an ATR and converting it into a blooming water bomber aircraft on floats or something, which looks scary, right? You just wouldn't want to get in it. But anyway, so it's that somebody will figure out sometime. But as we found, we tried to buy the 415 line off Bombardier back in 16, 17, in Fortress World, and the cost of relaunching I think the program had only been closed like a year, 2 years maybe. The cost of relaunching the program was just extraordinary, right? Absolutely extraordinary. And we hired LEK to help us do all the analytics. We even went out and talked to all the primary suppliers of nacelles and engines and kind of all the you name it stuff. Persuading these guys to spool back up was difficult. And of course, the catch was, well, if you want us to do it, then we need 12 ship sets. Otherwise, you've got to commit to 12 ships. Otherwise, it's not going to start, right? So very quickly, you could chew through $300 million of working capital without having anything to show for it. So I don't know. It'd be great if the 515 does, come to pass. But as time goes by, people are figuring out, well, I can't wait. I'm just going to have to do something. And the fires aren't going to stop, right? So I'll figure out other ways of dealing with it. And that's sort of what they do.
And I mean, in recent news, the grounding of the DC-10 fleet, which are almost exclusively heavy lift firefighting these days, I think. Granted, it's a different type of mission, but still, put out the fire. You'd send one DC-10 or 4 or 5, whatever, trips on the 415. But like you said, like the demand for putting out fires probably will only continue to increase.
Only go in one way, right?
No.
The fleet is very tired, right? So if you look around the Scooper fleet, there's some stats kicking around somewhere, which every now and then we have a look at. The average age of the 415, 215 fleet is like 30 plus years or something or other. It's really aging out.
Young chickens.
Right? No, yeah. I mean, yeah. They, as you know, they're not very sophisticated, right? They're not pressurized and everything that kind of goes with it. So,
but I couldn't imagine the corrosion.
When we bought our 415s, whenever we bought the 415s, deal had to be done by the year end, which of course is December in Bombardier world. Then the next thing is, well, we'd have to have a test flight with these stupid airplanes, right? Because you have to have a test flight with stupid airplanes. And so 2 things. A, there isn't much water in and around, where they built? Toronto, whatever. There's actually not frozen in that part of the year, right? So it's like, well, where are we going to test the scoop on this thing?
Thunder Bay, I think.
I don't know. Anyway, they had to fly these things. From what I remember, they had to fly way south. But of course, these things aren't pressurized. So you're messing around at some shitty altitude, getting very, very cold and very, very bumpy, right? So not that I did it, but I do remember the time that everybody was trying to think, well, geez, where the hell did we take these airplanes in December to test them, right? And so I think the pilots had a fairly miserable time finding a bit of water that was open and and of course they just froze along the way as well. But anyway, so another interesting anecdote.
Yeah. Wow. I guess when you look at the Falko portfolio today, do you see it moving to kind of larger aircraft, or are you kind of still the same size?
Yeah, we're going to stick to our knitting, right? Partly because we're quite good at it, right? Our customer base is centered on it, so we're going to do anything, we should leverage that. We know our customer base well. We know their business models inside out, so we kind of know how they think and all that sort of good stuff. Which I think again has stood us in good stead historically on 2 counts. One is, in many cases, we've had CEOs of airlines come to us and say, well, we're thinking about doing this. What do you think? Kind of thing. And so, it's like, well, I wouldn't if I was you, or yeah, actually that kind of makes sense. Or, and now, and what you have to be careful about doing is obviously not talking your own book, right? And so you have to be as best you can from a pure business standpoint. I wouldn't do that. And despite the fact actually it may have suited me for you to do that because I could give you these airplanes that said, it doesn't work, right? And I think the other thing that we've learned over time, which again, I'm sure you guys have observed many a time too, is if anything's going to kill an airline, it's actually taking the wrong piece of kit to do whatever the mission is, right? And that's, and more often than not, it's just taking something that's too big, right? Because they sort of persuade themselves they can fill the stupid thing, which they can never fulfill. So, we understand our customers pretty well. And if we think about it logically, we have, I don't know, 200 and some odd airplanes, right? They will migrate up from the E1s to something because they kind of will, sort of stuff. And they'll migrate from, some of the CRJs to whatever they will, that they can do. And if we're smart about it all, we're in a position where we can help enable that in some shape or form, right? And so if there's one thing we can leverage, it's that. And then, if you kind of go beyond that, if you look it seems to me the competition in the bigger space is just unabated, right? So the pressure doesn't ease. It just seems to compound and compound and compound and compound and compound. And so, and I was talking with one of my mates in one of the other big leasing companies a few weeks back ago when we were messing around in New York, and it's like, well, how's business? Well, actually, it's tough, right? And it's being made tougher because a lot of the airlines are now saying, well, you know what? I'm really not sure I want to lease anything anyway. I'm just going to go buy it, right? So there's the other pressure, which is the airlines are saying, well, I always did think leasing was a bit expensive, and now I've really persuaded the fact, now I've got a ton of cash and a positive balance sheet again. Well, I've got the capacity to go and buy these things with cheap debt. So the pressure on the bigger guys is probably even more acute now. So no, we'll kind of stay where we are. We know what we're doing. We got a customer base, and we should leverage that market position. We should just leverage that. And if we can't find the right thing to do, then we don't do it, right? We'll just wait for there's an inevitability in our world, right?
That's something I've found that is probably what differentiates just a lot of not just in leasing and the airlines around that side, is the ability to not do something, what. And if you can, so I've long attributed kind of a tangential comparison here, but Ryanair. Like, I don't think people fully appreciate the success, how much of the success of Ryanair is their ability to say, okay, I just won't grow. And their costs don't go up, and their profitability is just like, that's incredible. Yeah.
No, I mean, we've always been, despite the fact I'm going to go and sit in a Goldman panel in wherever that is in 2-3 weeks' time, and it's all about M&A and growth and stuff. But the answer is, our growth was circumstantial. What we did in our M&A process was circumstantial, as opposed to we didn't go looking for it. It was a set of circumstances led us having to do something. But in fact, we've always said, we have no interest, in having the biggest portfolio, being the biggest of anything, right? And arguably, we quite like being the prettiest and the most profitable, which is what those graphs ultimately tell us. And we always say to our LPs, look, if we got no assets left at the year end, we've sold them all. It's because we think it's the right time to sell, and you should be happy. And then so the eternal debate is, well, then what are you going to do? And the answer is, I don't know, but I suspect if we've done the job we think we can do, and we end up nowhere, you're going to give us more money, right? Because you're going to think, well, that was smart, right? So we've never been fearful of ending up with, selling stuff. We've always traded more, probably in our space, more than anybody else, I would guess. And we've always been, brave enough just to walk away from deals, right? And so, as we've grown over time, we've competed head to head with, NEC, for example, and everybody else. And, we've never been scared of walking away from something and say, you know what, that doesn't make sense. If they want it, that's fine. And actually, in many cases, you've looked at the deal, you've looked at the price, and you said, that doesn't make any sense. It's not going to work, or it's going to blow up, or something or other. And then guess what happens next? The airline wandered off and sold the airplanes, or at least thought it was going to sell them to XYZ lessor or something, and they couldn't get the deal done. So then we get the phone call saying, that sort of stuff. So we've had plenty of those instances over time where we've been very pragmatic. It's like, no, growth for growth's sake it's not worth it. And I think if you look at our business model as well, I think actually having the way we've grown is through having used third-party capital in fund structures, right? And so you end up being incredibly disciplined on an investment by investment basis, right? So each deal stands on its own merits, as opposed to, well, I've got a balance sheet. If I add a few on the top, they sort of naturally become accretive to something. In fund world, each deal has to understand, it has to work on its own merits. And I would guess if you look back, say, for example, at the NEC, as NEC unwound, that actually it became much more about scale for scale's sake and lesser return each time, probably, don't know. And when you come to unravel it all, guess what, right? So you sort of persuade yourself, it's synergistic, scale counts, and there's all these other benefits. But, it does presume you sort of have perpetual growth. If nothing else, if we turn the taps off on the funds, it's okay, right? Because each of those deals stand on its own merits. We don't have to grow to become for the fund to be accretive. Right?
That's a bit of secret sauce, right? I mean, the phrase Garrick and I have been hearing, my goodness, since probably 2021 is deploy capital. I need to deploy capital. That's what I need to do. Yeah. And that's upside down. Right, if you really kind of think about it, I align it to like the idea of I'm going to pull the pin on this grenade and just make sure that I sell it to somebody before it goes off. Now, I think that's a bit extreme. I don't think the industry is a grenade waiting to blow up. By the way, I think no. But some of these deals on like the narrow body side and residual values and the type of things you hear, you're like, something tells me that you don't plan on owning this airplane by the time that thing.
That's probably about right. Yeah, I mean, we've always, even in HPS world, number one Fortress world, and certainly in fund world, we basically say to don't ring us up in January and say, well, how much capital are you going to deploy this year, right? Because the answer is we don't know, right? We literally don't know, right? We have a good sense of how much deal flow we'll see. And, typically our kill rate's kind of 10% or whatever it is. But if it's 0, that's sort of fine as well. But literally, and to this day, we don't get HPS bringing up saying, right? And or even in our funds, when we're raising both of our funds, they got accustomed to don't even ask, right? Because if you think about it, it sort of engenders strange behaviors, right? Which is the sort of a disconnect. Well, I've really got to deploy capital here because that's what I said to the LP, right? Or whatever it is. Or certainly in kind of hedge fund world, it's like, well, I only get paid if I deploy capital, right? I only get fees from my equity deploy, which again is counterintuitive. Yeah. So we've never, we refused to do it, and or never found our position where we've had to do it, and I think we would always resist it, right? Because better to do no deal than a crappy deal, right? So we just won't do it.
Is that going to be the title of your book? It should.
What's that?
No deal better than a crappy deal by Jeremy Barnes. Memoirs.
That's true. I've been around. Yeah, it's a bit like that. No, have we got it wrong a few times? Yeah, of course we got it wrong a few times, but not too many, thankfully. So, but yeah, we've been, Mark's got a very good nose for value. Let's put it that way. But he's a Scotsman, right? So he probably should do. So.
Is there a deal that you walked away from that you wish you You had?
You
No, I mean,
had done?
Yeah.
Yeah, there's one deal we got I'm not going to tell you what, we got very excited about one deal. And actually, it wasn't even a regional aircraft deal, but it was a big Airbus deal with a big US carrier where the OEM basically had provided backstop financing for a huge order, and they wanted out of it, and I persuaded Fortress to buy the lot, kind of like absolutely lot. That was multi-billion-dollar deal. And then I think the carrier, who I can't remember the carrier was now, figured out that this backstop financing, it was expensive, right? So they figured out a different way to do it. That would have been an unbelievable deal, like crazy deal. And I think the other deal, I think, yeah, in around space, we look kind of like, do I look back and cry over anything that we missed? Nothing particularly. And then, but the sort of tangential stuff I look at, which is, well, I wish that, so for example, I sort of wish we'd done the 415 deal with Bombardier. I think that would have been an absolute gold mine to start that production line up, for example, that sort of thing. So, I think that there's interesting seams of things that we've looked at over time. A lot of them we've done, but there's every now and then it's like, well, we, should have done that, but sort of stuff. But in the kind of core business, is there a deal I look back and I think, Jesus, that was a big miss, right? And the answer is, I can only think of one which would have been an absolute kind of robbery on the high seas, but it was so egregious. Even the counterparty figured out. Yeah, they figured it out before. We got very, very, very upset about what happened. But, well, I didn't. Fortress got more upset than me, but nevertheless. Other than that, no. I think, we've cherry picked off some pretty good stuff, right, over time.
So I'd love to get your thoughts on when I think about the landscape for in production regional aircraft. It feels like it's a finite space, right? Because now all of a sudden you've got ATR, which is on the turboprop side, then you've got Embraer, on the E-jet side, and you've got Airbus, but it's more kind of bigger gauge airplanes, right? Which obviously now you got the E2 which are small narrow bodies. So how does that affect your ability to kind of keep the portfolio moving, right? I mean, it's not because we obviously you don't want to do growth, but you still need to be able to keep buying airplanes. And so how does that affect your view?
Well, it'll limit growth, right? Because if you're only going to produce, I don't know how many new airplanes, you probably have a clearer view of how many of these new aircraft are kind of come off the ramp every year, right? But it's, pick a number, 120, 130, I don't know what the number is, right? But it's not a big number. And, I have no sense, I don't get a sense that either, for example, ATR or even Embraer are in the mode of massively ramping this thing up, right? Because kind of why would you? That's kind of, which sort of suits us on the one hand, because actually it keeps the residual values reasonably stable as a result. You don't get massive oversupply of anything. And so, so one of the things we think about, increasingly think about, is, well, where's the growth going to come from, right? So if you kind of look historically, our growth has really come from mopping up portfolios of regional airplanes that become buried in Avalon or buried in, I don't know, SMBC or wherever the hell they've been buried. We've kind of grown from in that manner, right? So, and for the most part, they've gone, right? We've kind of dealt with all of those. There's still a few lurking around out there. I guess AirCap's still got a bit of GCAS kind of buried in it somewhere. And there's a few other bits and pieces kind of lying around there that will get shaken up over time. And so where's the rest of the growth come from? I think there's a seam of opportunities coming. Some of the guys that have got current generation E-jets or whatever else, like they own the damn things. So they're going to want to transition out of these things. So there's probably there's opportunities there to do things. And so, I guess we've seen people like JetBlue already transition out, but there are others of that ilk that are going that necessarily will transition out. And a part of that is dealing with the metal that's in there, and then which probably means we end up going much more towards end of life assets than we sit today, because today we're kind of midlife gig. The second one is they will want new toys, so let's figure out, well, how do you weave those two together, which I think is probably relevant. Then if you kind of go beyond that, it's the pure sale and leaseback space is, even in our world with a 220 or an E2, is probably pretty tough. Like, it's a tough place to make money just because it's a tough place to make money. So we'll probably look at that space fairly sparingly. But I think what is going to recur, I think, is those guys who, the bigger lessors who bought, 220s and whatever else over the last 4 or 5 years, they're going to start turning those over, right? So they're going to want to try and monetize those over the next 2, 3, 4 years, whatever it turns out to be. And so I think that might be an interesting space for us to go play as well, right? Because we'd be a natural home for those things. So, airplanes, they're kind of 4 or 5 years old, and we're seeing some of those already spin out, right? We're seeing 220s today being remarketed that are 4 or 5, 6 years old. They've still got a 5, 6 year lease attached to them, that sort of stuff, right? So, so I think there are going to be opportunities in and around that space too. So, if we can deploy, I don't know, buy $400 or $500 million worth of airplanes per annum, that's just fine, right? Absolutely fine. Which, pick a number. We're saying it's like 20 airplanes, 20, 30. That's all it is. We're not in this to go ballistic.
Right.
If we keep our portfolio stable by doing that sort of thing, that's just fine, right? Just keep turning that capital over. So I think our model is much more about velocity of capital than accumulating capital, right? So the opportunities are out there. We probably need to think a bit more about how the tools we need to finance those things, because just because we do, but that's not a challenge, right?
Yeah. So with that, and this is a very hypothetical question, but do you think, based on your the comments that you get from your operators, right? Do you think is there a new airplane that is not built that needs to be right? I mean, is there anything where people are like, what, it would be great if we had a, and I hate to say like a new 50 seat regional jet, right? Or right, is there something that people would want to see?
I mean, the answer is I'm sure they would, right? But I don't know how the maths works, right? So if you think of that, it's like simple maths, right? And so if you just think of the non-recurring cost to build an airplane from scratch, it's billions. I mean, absolutely billions. And I guess the two guys in the recent past tried that, right? One was Bombardier. I don't know how much. What was that? 5 or 6 billion in the hole before they got anything out of the gate, right?
I think it was up near 7 or 8.
Even worse than that. Anyway. And then the guys, the Mitsubishi guys, right? Yeah. And so,
right.
And if you think about it, I can't remember the numbers, right? But I think, depending on how you define our space, pick a number, it's like 8,000 airplanes in our universe, maybe perhaps, of which, 80% of that might be jet product or something. Bearing in mind the US is scope limited, so that becomes difficult as well.
Mm-hmm. Yeah.
You take a very, very big number, and not a big universe of airplanes that like not a big target market to kind of put them into, then you've got the market share you'd have to get to actually just deal with a non-recurring cost, never mind make a profit, is just doesn't work, right?
Yeah.
And so you can sort of, and of course it works if it's pick a number, a narrow-bodied airplane, just because the universe the pool that you're fishing in is huge, right? Ours is 6, 7, 8,000 maybe aircraft, of which, pick a number, I don't know, 1 or 2 are probably props sort of thing. The rest are somewhere between 70 and 150 seat aircraft, and the non-recurring cost just to get something built, whatever it is, certified, built, everything else is huge, right? And then the sort of question in the house is, well, even if you were to do that, just say for the sake of argument, then it's like, well, is it just going to be such a significant and fundamental change in the operating economics of that asset? Everybody's going to say, oh, geez, I've got to have one of those, right? And the answer is, well, we've kind of gone through that with the next, whatever you want to call it, the next gen engine kind of thing. Interesting. But what doesn't work in our world, of course, is if you think of the average sector length that our airplanes fly, it's 700 miles or whatever the number is, right? So even if you had the fanciest engine in the world, you're probably not going to see the full benefit of that because the sector length is just too short, right? Like the economics just don't work. So it's hard to see what, I guess that's how you get to Embraer effectively re-engineering the E1 to the E2. It's sort of what it was really. And Lord knows whether Bombardier, if they ever sat back and thought, you know what, we wish we'd never done the C series, we should have done something with the CRJ 900 or something. Christ only knows.
Oh,
right?
they did, and that failed too.
Did they? Oh, did they? Oh, okay.
Well, the 1000, right?
Oh yeah, for sure. That's right.
The most forgettable.
That was even worse. Anyway, so, but it's hard. Bear in mind, I've kind of been in the manufacturing side as well, right? So it's just I know the non-recurring is just so hard. And if God bless them, the Japanese can't figure it out, right? And they're not bad at manufacturing, then but the market's just fundamentally too small, I think, to deal with that level of non-recurring cost. I think, right?
Yeah. I mean, for the longest time, it's been, the calls have been 30C turboprop, right? There's been no replacement for years. Yeah. Those airplanes are pretty well aged out. I mean, you'll still find them if you go searching, but it's just disappeared. And the reality is you can't, just like you said, not just non-recurring, but, to make the non-recurring work, it's a $20 million airplane. And they just say, I'll go get an ATR 72 for that.
Exactly, right? Anyway, so answer is no. I don't think anybody's going to rush to I don't whatever this next generation thing might be. I guess your best shot at it is, you kind of re-engine a turboprop. Well, I don't know, with whatever it is, a hybrid engine or whatever you do it. That may be about the best shot to whatever the next thing is. But then that has a very limited, in terms of a mission, that's a very limited mission, right?
Mm-hmm. Yeah.
I think it'd be interesting to see what Mr. Wilcox does at JSX with his ATRs. That'll be interesting to see how that goes, right? So
he just took his first one, didn't he?
Yeah.
I think,
but I think the interesting thing there I think he would even admit it, right? Is going to be the customer acceptance of it, right? So how do they think about it all? Because I was used to, even though it was shitty, I was quite happy to get on a CRJ 900, right? So the ATR will be a much, much better airplane to go fly in, just because it will be, because it's newer and everything else, and roomier and tons of space in his airplanes and stuff. But then there's the anathema of it's a turboprop kind of thing, right? That they should worry about, but it sort of is what it is, right? So
I know, which these days it should be it's not a turboprop, it's a green airplane, right? It's better for the environment.
And everything that goes with it, right?
Yeah, right, exactly.
It's quieter, it's cleaner, it's greener, it's everything, right?
Yeah. So, and yet people still go, but those prop things, I don't know.
Exactly, right?
I don't like getting on one of those.
Anyway, so I'm sure, I don't doubt, I'm sure it'll be just fine, right? Because the world has moved on dramatically since the 90s when the US market basically just parked up all its props, right? Like I remember Eagle having a big crash and they parked the whole lot pretty much, right? Overnight. So, but yeah, that's about the only arena where you could see, I don't know, whatever the next gen thing is, but then again, it's back to the engine, right? So,
yeah.
So no, economically, financially, I just don't see how you build how would you call it, clean sheet, 120 seat airplane. I don't think the maths works.
Well, the closest, no, it wasn't 120 seat, but the most recent example is the slow death of the E3, Embraer's ill-fated. I mean, that never was going to that was never going to happen. But still, right? I mean, that was the closest that we got to something new.
And I don't know. We'll see what happens, right? I mean, there's always the specter of the Chinese with whatever that is, right? Because their cost of doing whatever.
But economics doesn't really matter in that equation, right?
Because then it becomes a slightly different issue, right? So, and the Russians had a crack at it. That didn't work for long, right?
No.
So,
no,
right?
Yeah.
It's hard to see, which basically means, if you want a 110, 15 seat airplane, you're going to carry on flying your E1, whatever it is, right? For as long as you possibly can.
Yeah.
Because that's sort of all you've got, right?
Yeah. And it's the same thing, I think, from the 30 to 50 seat or 30 to 60 seat, right? I mean, that's an even smaller market.
Exactly,
but that will probably never be replaced, right? So the idea is, I guess airlines will have to grow into something bigger, but they're not. Yeah. It's not those markets; those are not growth markets, right? So how do you How do you satisfy that, right? That's a crazy part.
Yeah, exactly. Right.
Yeah.
So on the one hand, it's I don't know. You can sit and say, well, Jesus, that's going to curtail the growth. But on the other hand, the answer is I think the kind of good news is they're going to run our assets for longer because they probably are. B, it probably means should mean more robust residual values, but then and all that sort of good stuff, which should be fine, providing the engine manufacturers behave themselves, right? If they behave sensibly, then that will be just fine.
Jeremy. That's a big if.
Hey, look. We played the game with Honeywell, so we have the playbook on how to deal with it. Yeah?
That's right.
So we have that one. So on the one hand, you could say, oh, geez, well, that's going to make growth really tough, and the answer is, well, I think that providing you don't want to go and create a 500 airplane kind of business today, then then you're sort of okay. I think that if you had any pretensions today to growing, like a $10 billion portfolio up in our space, kind of good luck, right? So that doesn't exist, right?
Yeah.
So or arguably doing what NAC did before, which is kind of getting to 500 and something or other, right? But in our world, if we can potter around at 200 to 300 airplanes, that's just fine. To just keep turning the capital over, that's absolutely fine.
Well, look, Jeremy, it's been great. This has been we're going over about an hour and a half, which I'm glad we were able to get you on and hear about all the great stuff on as a regional lessor and your background, and we'll hopefully keep helping you to put out that good message of. Here's the realities of the regional space, right? So, we certainly appreciate that. But
we very much enjoy working with you guys, and I'm not sure quite why it took quite so long to actually connect up, but I'm sure it's more than coincidental. We're on sort of similar crusade, and we kind of sort of think the same way about the market and the opportunity and everything else.
Which, by the way, how you think the same way about the regional market is just to simply think about it, because so few. It's fish in a barrel, Jared. I mean, like...
No, I agree. Yeah. It's a fair point. Yeah, exactly. So, So, it's great. So, and I truly think we're actually starting to see the fruits of, your work, right? Because...
Awesome.
We get, which is, we had conversations with people about it all the time. So and they think, oh yeah, that's kind of interesting. How does that work, right? And so, we even had somebody the other day, actually somewhere way back in HBS world, who was looking at financing in the US to regional airports. What does this mean, and how does that work, and how do you think about, the sustainability of regional lift in some of these markets? You think about it like this. Oh, okay.
A little bit different, yeah.
Yeah, it is. It's a different way of thinking, but you have to do it. You do the work.
Exactly,
yeah,
right?
yeah.
Exactly.
So, well, great. Well, this has been fantastic. So, thanks for taking the time to chat with us.
See you.
Good morning, Courtney. Good to have you back up. Good to have you back on. Yeah, that's a good
Thanks
one.
for inviting me.
It's good to be back. Good to be back on our own show.